Welcome back to this week's station of Mortgage Talk. I am your host, Mark Hairston, and I'm really excited about today's show because, as I've mentioned in the past, I really do this show primarily to learn. So I bring on speakers that I can learn from as well. We want to share information to the marketplace that can help you make very good decisions around your investments, particularly in real estate. And today I've got a couple guys who work in a field of lending that I don't. We're both in the same space of lending, but I'm more traditional in the mortgage space of doing residential mortgages. And these guys are in a different area called hard money or private lending. And I want to introduce Ray Walter and Curtis Simpson, who Ray owns Capstone Funding. And Curtis is sort of his right-hand man, his chief lending officer. And I'm just really excited to hear what their story is. Matter of fact, I'm pretty sure we're going to do this more than once because there's so much meat on this bone to chew. So give me Ray, I want you to kind of, or both of you actually spend a little time, a few minutes here or whatnot, introducing yourself and your experience in this world.
Sure. So Ray Walter with Capstone, and thank you, Mark, for having us on the show today. We appreciate it. And so I've been in the lending business since 1998. I grew up in Orange County, California, moved to Austin in 98, started with Countrywide Home Loans.
I remember those?
Yeah. Started in wholesale lending.
That's in the rearview mirror.
Yes, that definitely. And so I was there for about 3 years. In 2001, so from 1998 2001 is when I launched out, and I opened up my I got my loan officer's license and eventually opened up my own conventional mortgage lending company.
Okay.
It was just, did conventional loans, FHA loans. And
like I do today.
Like you do today. That's
right.
Correct. Yeah.
That's right.
And about 2005, if I remember correctly, I started seeing this need for private lending. Now, I've always heard about it. I didn't really understand a whole lot about that, but I researched out that industry, and I wanted to understand. Here I am as a loan officer. I'm already doing conventional loans.
Sure.
What is this private lending? How do you fund private loans? What is hard money lending? So I learned everything I could, and I just scoured the internet, and I even ordered, classes that you can. This is back when
on CD.
This is actually on DVD, if you can believe that.
Yeah, back when
DVD before it was on
right.
YouTube. And I learned everything I could, and I was fascinated with that industry.
Yeah.
And what hard money lending, private lending, also known as bridge lending, it's gap financing.
Okay.
And that's why they also call it bridge lending. And I started seeing this need for individuals, let's say for renovation properties, for example, because that's the most common asset that people understand. On the conventional side,
at the time, single family primarily
single family. Yeah. That's correct. And I'm not sure how much it's changed in the conventional lending world because I haven't been in that.
Right.
Certainly not recently. But at that time, I couldn't find good financing available for someone who wanted a rehab loan. And I would work with real estate agents, and occasionally I didn't get a lot of them, but I just was fascinated with that need. And what I realized is that there are individuals that would buy a property that was, needing maybe, $25,000, $50,000 in renovation. And there really wasn't a good program there, especially on the conventional side, for someone to get financing.
For investors.
Primarily. Only investors, not homesteads.
Yeah, let's be clear about that.
Yes, that's correct. Yeah, only for investors. And so that's what really propelled me into the hard money lending industry. And I started a little bit with my own capital, and then I worked with some of our family money and clients, and it just organically grew. And by
over the last 15 or plus years, really.
Right, because in 2012 is when I launched Capstone, primarily only as a hard money lending company.
Okay.
And I ended up leaving the conventional lending industry.
Totally.
Went completely. That's correct.
And then Curtis, tell us a little bit about your background.
So Ray and I met early 2000s through some ministry things, and I ended up actually becoming what is now Capstone's largest borrower.
Okay. You're a client one time.
Yeah. I was doing luxury flips from everywhere from Ocean Drive in Corpus to San Antonio and the Dominion.
Wow. Wow.
Gated communities, Canyon Lake, and even here in Austin.
Okay.
So we've been friends for a number of years, done quite a bit. I actually come out of I was part of the tech boom. I was working for a technology company. From there, I rolled out a venture capital firm.
Okay. How long have you been in Austin?
I've been in Austin. I came in '86.
Wow.
played football at UT
Wow.
and
Attaboy.
got
Hook 'em, hook
got
'em.
a degree and never left. So
I went to UT, didn't play football, but
yeah.
I still go to the games,
So anyway, I guess 2017, I kind of been consulting. I have my own capital company
Okay.
that I do development deals with and such. And I started consulting. And I actually, in 2012, I actually wrote the business plan for Capstone.
Awesome.
Right.
So
In
our
12?
roots in 2012, yeah,
Wow.
when he started. So he organically started growing it for the next 5 years. And then 2017, it was just kind of meant to be.
Yeah, that's fantastic.
And came together and started working.
Well, tell us a little bit about the typical profile of your clients. I know you all do a variety of types of loans in different industries, if you will. You talked about a winery as an example, okay, that you all funded. But what's your day-to-day sort of typical client, or is there one?
So yeah, our bread and butter is single family residential.
Okay.
New construction.
New construction.
Yeah.
Working with builders.
And funny enough, we actually don't really call it hard money anymore, at least as far as for Capstone.
Yeah.
Hard money does have a little bit of a stigma from the fix and flip days.
Right.
And there were a lot of foreclosures. Then 08 happened.
Yeah.
Kind of got lumped into the subprime, just
right.
But I will tell you, I have profiled our clients, and our average client is upper 700 credit scores.
Yeah.
But they are looking for something Ray taught me a long time ago. Hard money or private lending is about ease, convenience, and speed of capital.
You can fund quickly.
We can fund quickly.
Mm-hmm.
There's no red tape.
Mm-hmm.
And as long as the asset is good and the LTV is good, which we pretty much walk up to the 70% line on LTV.
Okay.
Then.
And that's about it.
Yeah. I mean,
yeah.
Well, we depending on the asset class.
Yeah.
So if it's commercial, we're going to be, maybe 50 up to 60, multifamily, same. But for residential, 70% LTV is just, I will tell you this, if a deal doesn't meet the 70% LTV when you consider the purchase and the budget, it's not a good deal. And a lot of times we save some of our builders saying, this is not a good deal. You should not be doing it. Your margins are too slim.
Got it.
Yeah. One thing I'd mention too about that on the 70%, that is based on after repaired value.
Yes, after repaired value.
That's the key. So in other words, the 70% after repaired value, take for example, if it's a rehab loan or new construction, that can still be up to 90% of the total cost.
Right.
So the best thing to do if there's someone who's interested in getting a private loan is to call us and we can run the numbers. Run the numbers for them, because the 70% it's a little deceiving. It's actually much higher than you realize when you look at just the cost of the loan.
Okay. So, but builders are a big target market for that because of the ease of finance. Is that correct?
That's correct.
They don't have to go through so much red tape to get a line of credit.
Exactly.
Bank.
That's right.
And banks have really tightened up.
Banks have really tightened up. And one of the things we always tell builders, really any client, we're more expensive than a bank. We're more expensive, obviously, than a conventional loan that a conventional officer can get. But we're still cheaper than a partner. Yeah. And that's the key. So we're in between a partner that might want 50% of the profit on a transaction and in between bank financing. Capstone's right in the middle of that.
So it's like going to a convenience store to get a gallon of milk. You'll pay more than going to HEB.
There you go.
But you don't got to wait. And you don't got to wait in line.
And you don't got to walk so far.
That's a good analogy.
That's the way I'm looking at it. That's the way I'm seeing it.
That's a good analogy.
Well, I like Ray basically said it, but the you want to say the phrase that you say, which is hard money or private lending is the cheapest equity partner you'll ever have.
Okay.
Right.
So that's why we get high level, and totally most of our guys are bankable. Totally bankable.
Are they bankable?
Oh yeah.
Okay.
Yeah.
The reason I ask you, and we talked about the frustration, at least in my experience as a traditional, what we call agency lender, selling loans in the secondary market to Fannie Mae or Freddie Mac, there's a lot of red tape, and to close a loan, usually around 30 days. Sometimes it's faster, but there's a lot of documentation and stuff like that. So you guys, like you say, you all fill in the gap.
That's right.
Mhm.
between somebody who may not be able to qualify traditionally
That's right.
for whatever reason,
Mhm.
but has a good asset and maybe good credit.
Yeah.
And you guys can
It is
do that.
asset based.
Yeah.
So
Yeah. So you mentioned builders, custom builders, I assume.
yes. Well,
Basically.
most of them. I mean, we do some spec.
You do some spec.
Yeah.
Okay. Okay. But what other type of primary clients would you also serve? Talk a little bit more about your client base.
So I would say bread and butter, probably 70% of what we do is that new construction.
Okay. Mainly
Um,
here in Austin? Central,
actu-
Central Texas?
Well, we do all of Texas. We've actually even lended outside Texas. In fact, I was the borrower who piloted that program. I did 6
That's right.
homes, Seattle to Florida.
Got it.
But yeah, the primary place that we focus on right now, and this is by my own stamp or design, like i.e., I don't let us go outside of that, is we are solely in Texas, and even a bigger, more micro focus is the Austin to San Antonio corridor,
Okay.
and then the 46 corridor
Okay.
from Seguin all the way over to Bernie
Got it.
through New Braunfels.
Got it.
So that's Central Texas with the top edge of South Texas is primary, but we actually do a few things in Corpus and a little bit in Houston, not
Okay.
as much anymore.
Okay.
And then we love Dallas Fort Worth too.
Yeah, we've seen, at least in my experience, we've seen a big shift in the residential world. I'm going to focus on that for just a second because that's been my world, as far as values in Austin. What are y'all seeing? Are you seeing? Let me put it this way. I've had some friends of mine who have gotten in some trouble, in the fix and flip in the last year.
Oh, yeah.
Because they bought it wrong.
Right.
Our timing was wrong, if you will. And they're challenged right now with equity positions and selling properties and even leasing properties on some level. What are y'all seeing as Austin goes as far as values? Are y'all bullish here still? I assume you are.
Well, yeah, we're highly bullish. But if you knew how to navigate this 10% adjustment, which the numbers just came out last week, and the past year, year over year to the month of July was a 10% reduction in value.
Yeah.
And
in the last year.
Yeah. So for us, we're still,
and that's not too bad.
We're
really.
still, yeah, we're still within that range that we're okay from an asset standpoint.
Right.
But we did, when we were coming into COVID and the supply chains were affected, demand just shot through the roof. Everybody from the left coast and other areas moving here.
Left coast.
They just absolutely, the demand, I think there was 165 people a day coming to Austin.
Yeah.
And
do you know the stats on that today as far as people coming into town?
Yeah, I mean, we're not too far below that.
Really?
From
So
the
it's
last
still
number
strong.
I saw, it was last month sometime.
Okay.
So I'm thinking we're in the 135 to 140.
Okay.
Don't quote me on that.
Okay.
But
just curious.
Yeah, it's still really healthy.
Yeah.
One of the things I mentioned too on rehabs, rehabs probably, what would you say, Curtis? Less than 5%.
Less than 5%.
Less than 5%. So less than 5% of our portfolio is fix and flip
flips.
transactions.
Yeah.
And there's a couple reasons for that. Number one, the margins on fix and flip transactions are much thinner than the margins on new construction.
And the budgets are bigger surprises.
Budgets are bigger surprises. They always say you never know what's behind the walls.
Yes,
right.
That's right.
And so that's been our experience. So we're not, and Curtis has done both. He's done fix and flip. He's done new construction. He's done development. And so the margins are always better on new construction. And that's why we favor new construction over renovation. So
I like that.
Fortunately, we haven't had a lot of our borrowers get in trouble with that price change that we've had over the last 12 months because of that.
That makes sense. That makes sense.
And they're also liquid enough to ride it out.
Right.
The builders.
Builders.
Yeah. Yeah. Because they've done well over the last few years. Tell us our viewers a little bit about some success stories of maybe a client that y'all worked with in the past that it worked out for everybody, including y'all self. Do you have any suggestions around that?
I think there's one primarily that we would discuss, and I don't think he'll care if I mention his name. His name, Peter Pivito. He worked for the top custom a luxury builder here in Austin. He ran their crews for about 7 years. And in fact, his boss of that company he used to work for has now just become our new client.
Awesome.
He was literally the custom builder of the year in Austin.
Wow.
For the last 2 years.
Awesome.
Gossett.
Okay.
But Peter started off as I don't know if you know what condo regimes are.
Yeah.
Okay.
I live in one.
Okay. So when that became the thing and East Austin started going through that process and it was like automatic, he started off with a little fix and flip on the front property and then built new construction on the back.
On the backside.
And
what year was this approximately?
That was 2017.
Okay.
That was the first deal I did in Capstone.
Got it.
And that was the first deal he did on his own. Now he's building 4 multi-million-dollar homes in Terrytown.
Wow.
And probably has 7 or 8 other developments going, including small subdivisions of 18 units down to other kind of more median type.
That's awesome.
Construction.
In the last 6 years?
In the last 6 years, and he's gone from a guy who needed investors around him to not needing them as much.
Right. Is he still a client?
He's still a client
of y'all's.
Yeah.
Yes.
So he's doing some big stuff. That's
So-
great.
And just to tag in on that, with hard money lending, bridge lending, it helps people like that get started,
Yeah.
right? Where we do
Gives them
become
the
it's the
chance.
cheapest equity partner you're going to have, like you said earlier, and so we're willing, as a hard money lender, we're willing to take that risk that a bank may not take because we're still asset based. So Peter had great experience, right?
Mhm.
Great person to work with,
Right.
right? And he represents a lot of borrowers that way.
He'll come back for more.
And he'll come back for more. And
Great
so what
client.
happens, what we really love about our business, and I would see that sometimes on the conventional side, but we really love about hard money lending is a lot of our clients, they become clients for life.
Sure.
And we might do 3, 4, 5, 6 transactions, a year in some cases, depending on how big they are.
Mhm.
We'll do multiple transactions and they'll come back and we'll do another loan for them. Right.
Mhm.
And it's usually similar terms, but what they really appreciate is that they can give us a call and say, hey, I've got another one. Right. And we bring them through that next process. So we do operate very much like an equity partner in a lot of ways, but we're still lending as if we were a bank.
Yeah. So
Right.
speaking of an equity partner, do you ever do true equity partnering with people?
Typically we don't.
Yeah.
The loan structure that we have gives them the equity that they need.
Yeah.
We usually prefer to just stay in the lending business.
Okay.
And that is something that Capstone's going to be looking into in the near future.
Okay.
We're not there yet, but right now with the structure that we have, it operates as if we are an equity partner.
Okay.
We're just establishing a second fund that will be part of it. It's
Yeah.
already up and running, but we're just not moving there quite.
You're not
yet.
investing any of that money yet?
Not
Not yet.
quite.
Yeah.
We're still lending it.
Yeah.
Okay. Good. Before I forget, let's make sure people know how to get a hold of y'all. Okay. If they're wanting to know more information, this is just a snapshot, this little radio show. So tell us your number, your email address or whatever, your website.
Okay. It's capstonelending.com.
Okay.
And my email address is easy. It's Curtis, CURTIS, @capstonelending.com.
Got it.
And Ray knows this. I mean, my builders are texting me during Longhorn games and we're going back and forth about things like that. And in the middle of it, it's like, oh, by the way, I got a deal coming to you Monday.
Yeah.
So I give them my personal cell phone, 512-656-1433.
Okay. Excellent.
And to get around any unintended firewalls, text me.
Yeah. There you go.
Much easier than getting hold of me through phone call because you might get my spam robo killer.
Yeah. Okay.
So-
Got it. I didn't know about the robo killer, but I need one of those.
It works really well. There is a way for them to leave a message and say who it is, and I can kind of screen it.
Right.
But
Otherwise, text is the way to go. Seems
Yeah.
like that is the preferred method of communication
Oh,
these
yeah.
days, for sure.
sure.
Yes.
So speaking of your clients who come back for more, let's assume that these builders come back. How fast can you fund a deal, generally speaking?
Typically anywhere. It depends on the transaction and how, if they've got their documents together, because it could be anywhere from a week to 4 weeks on the average. Wouldn't you say, Curtis?
Yeah, that's average. I mean, look, we've funded an $8 million deal in like 48 hours because the guy was going to lose his property to a nefarious loan-to-own kind of lender.
Uh-huh.
And we knew him and trusted him. and I did the personal. My expertise is in value,
Yeah.
so I did the thing. So we can do that. It's not our preference.
Sure.
Right.
I understand. I'm just curious. And relative to commercial properties, can you share a little bit what y'all do in that space? Like apartments, do you work in that, warehouses, anything like that?
We're kind of getting close to that, but right now what we're doing is typically land that's going to be a future apartment complex.
Okay.
And so we'll get developers, commercial developers that will come to us. They'll purchase the land because they need to purchase it maybe quickly. They'll come to a company like Capstone to get what's called the bridge loan, and they'll acquire the property, might do some horizontal development on it, and then eventually they'll end up getting financing. There's HUD financing out there for apartments that would be hard for anybody to compete with.
Okay.
So typically it's not on the vertical construction,
Okay.
but it's on the horizontal development of what might be either a subdivision or it might be an
Or
apartment
BTR
complex.
or multifamily.
Yeah.
And BTR is for those in build to rent. So
Okay.
that's a huge movement right now. I'll see
In the single family world?
Yeah. See how long it lasts. But those who are able to, from a portfolio standpoint, hold on to that and get there, you're seeing a lot of institutions more than the clients we serve.
Yeah.
But our guys are preparing and entitling the land for those guys.
Okay.
I've got a deal in New Braunfels that's doing that right now.
Okay.
So,
all right. And you interchange the words hard money to private lending to bridge loans. Is that correct?
Yes.
Okay. Because it's, I didn't know that. I thought those were separate things, to be honest with you.
Okay.
But
Yeah.
when you speak about bridge loans, to me, that's a sort of a temporary situation. You want to roll out of those pretty fast, don't you?
We do. So most of our loans are anywhere from 12 months to 36 months.
Okay.
Probably more 12 months or less in most cases. Unless it's new construction, we're looking at probably, would you say
18 to
months?
24. Yeah.
Mhm.
Okay.
Yes.
And y'all fund it from the ground up?
We do.
Yeah.
I always say from trees to keys.
Trees to
fine.
keys. I like that. I like that. I like that. So what else can y'all share in your world? I'm gonna let you guys run with it.
Well, another thing I would mention too, so we talked a little bit about what type of transactions we fund. New construction, we'll do commercial development, we'll do commercial land. We have ratios that we look at, so we don't like to do a lot of land, right? So we have to kind of watch those percentages. But we'll do commercial office. That's probably not a real popular asset right now, but we'll look at that if it's a low loan to value and the borrower's got liquidity. Another thing that we've done too is cash out refinances, and that's where we've done a lot of those lately. And they're not necessarily coming to us for obviously a better interest rate, but they're coming to us because they need some cash.
Yeah.
So if they're sitting on a commercial building and they've owned it free and clear, or they have a small first lien balance on it, and they'll come to someone like Capstone to say, hey, I need to get an extra 100,000 on this particular property that I own to reinvest it back into the business.
Okay.
Right. So that's the other thing. We have another one. We've had some other ones in the past, I should say, where there's been they're buying out heirs in the property.
Okay.
Buying out the brother and the sister, and and then one of the siblings wants to keep it.
Got it.
And so they're buying them out. And usually what happens is they'll usually go to a bank first, and the bank says, well, we want to see some seasoning, right? And so come back to us in 12 months. So they'll come to Capstone. They'll get the seasoning, they'll get the track record, then they'll go back to the bank.
A lot easier loan to do when they go back.
That's right.
Will you do residential too on those?
We'll do residential as long as it's not owner occupied.
Yeah.
So
That's
all we
right.
can do has to be investment.
No homestead.
I forget
no
about that
owner-occupied.
sometimes.
Yeah, it has to be investment. So
Investment,
in that example, that would be like an investment property, right? That
Got
they
it.
may have inherited and they need to buy someone
Okay, so it'd
out.
be like a line of credit almost.
It would be, but we would actually just do it as a loan.
Yeah.
So we would just cash them out.
Yeah.
And we're okay with cash outs as long as it fits our LTV, loan to value parameters.
Is there anybody in the world doing your sort of business with owner occupied properties, or no? Is that?
Oh,
is
I
that
don't think
is that
they're in
illegal?
Texas.
They're not in Texas.
Yeah.
it's really hard to
if
find
they
them.
are, they're doing it creatively and
Okay,
not announcing it.
because there's a lot of people who come to me that I can't help.
We get a lot of mortgage brokers calling us saying, "Hey, got this owner occupied? Yep,
Is out.
just can't do it."
Yeah,
Yeah.
I understand.
No,
Because Texas
not
does
worth the
have some
risk.
strange laws.
Those are the
around
quickest phone calls we get.
that. Yeah,
Like,
click.
and I
next,
wish
click.
and I wish we could help them out. It's just
Yeah,
you've
we
got
do.
the Texas homestead laws, and it gets real
Right.
ugly, and it gets real hard for a hard
I
money lender
understand.
to do that.
In traditional lending like I do, our rates are pushing 7.5% right now.
Yeah.
And that's a
Well,
qualified borrower.
You're hitting on something that we are getting people like the top builder I spoke of earlier.
Yeah.
He's totally bankable.
Yeah.
The interest rates
Yeah.
are literally bringing those people to us because they'd rather pay a couple more points.
Absolutely. Absolutely. Well, this is we're just kind of scratching the surface right now.
Mhm.
You know, I mean, I'm here, like I said at the beginning, I'm here to learn too, because I want to know more about what you do and how to participate in that,
Mhm.
whether it be the fund
Mhm.
or my personal investments, you know. So I'd like to have you guys back again.
Yeah.
You know, and we'll
Absolutely.
talk
Would love
some
that.
more. We've got a lot of questions here. We've covered maybe about a third of them at most, you know. So we're going to wrap it up today, guys. And again, we really appreciate y'all listening in to Mortgage Talk, where every week we come in here with some knowledgeable people to share what's going on in the world to help you guys make better decisions around your investments. So until then, thanks again, guys.
Thank you.
You bet.
Thank you. Thank you, Mark.
You bet.
Mhm.